morning. Today is Tuesday, September the 19th. The time right now in Singapore is 10:09 in the morning. And overnight, there were hardly any activity in the market after Friday's big sell-off. And we can see that the reason is because there was hardly any economic data that was released yesterday. However, starting today, we will have the Canadian CPI numbers, so that should cause a little bit of excitement. But the focus will be on the FOMC meeting, which is going to be slated for Thursday morning Singapore time at 2 a.m. So do watch out for the FOMC minutes meeting, in which the Federal Reserve is largely expected to hold interest rates steady at 5.5%. And the language will be whether they are going to hike towards the end of the year, which most people think that there will be one more rate hike as promised by the Fed chairman himself during the June FOMC meeting. So we can see that in equity markets, we can, the Dow Jones is basically quite flat. You can see overnight we have a very small trading activity. This is the daily time frame. You can see the equity market basically right now is, in my opinion, a little bit soft, because on Friday when the market hit a high of 35,358, it closes as a bearish engulfing bar. Can you see this bar here, this orange color looking bar? We can see the entire trading range is actually longer than the day before, so that makes it a bearish engulfing bar. And this is rather bearish development, and this is not just happening in the Dow Jones, it's happening across all three major equity index, so that make it very significant. So if the market do come off and breaks this support line here represented by the blue gradient line here, the market is likely to test the 33,800, which is this low here traded in July the 10th. So by and large, if we see this move, it could be a three-wave pullback to as much as 33,576, which is the 100% measurement here. So do watch out for the move below this low here at 33,800 towards the 33,600 levels. Over in the S&P 500, we see something very similar. Again, we can see Friday we have a market move to 4,566 even, and then it closes as a bearish engulfing bar, very similar to what we see in the Dow Jones itself. And overnight we have a very small trading activity, and this is also poised to show us that the market is likely to do a three-way pullback to below the 4,350 that we saw on August 18th towards the 4,280 levels, which is this line over here. So do watch out for at least a minimum three-way pullback here. Okay, over in the Nasdaq, similarly we see a bearish engulfing bar after market traded a high of 15,719 and 3/4 on Friday, and this looks like a three-way pullback, targeting at the minimum 14,266 and a half, which is right where this bottom is on the June the 1st at 14,470. So do watch out for this move here. Okay, and in the Asian markets, Nikkei, the Hang Seng is a little bit soft today, and prices are likely to dip lower into the 16,850 levels, perhaps to even as low as 16,000 levels. So this is basically a continuation of the move down from 22,798. In the Nikkei, we are seeing a bit of pullback after yesterday's rally to 33,450. Now, yesterday's rally into this pocket of prices was actually within this area of resistance here at 33,190 to 33,470, which is a pocket of resistance. And this morning we can see that yesterday was a public holiday, so this was actually this morning's move. Okay, so this move here is actually a reflection of the January's soft equity market outlook for the global markets. So this is no surprise here, and I would suspect that the price will go back to 32,320 to as low as 32,140. Okay, and let's see in other in currency markets, we can see that the dollar remains relatively well beat, but I think that it's going to come to an inflection point very soon. You can see that the dollar index has basically been rallying all the way from July 18 all the way to where we are right now, with a high on September the 7th at 105.125. Okay, so we can see that this high is actually one of the highest in 6 months. So right now what we can see that the price is likely to go even higher, perhaps to go into this bracket of prices between 105.33 to 105.87. and I think the market should expect some kind of resistance or at least profit taking to develop from here. So do watch out for any kind of move into this bracket of prices. Do not chase this market any much higher than what it is right now, because upside is very, very limited in my opinion. In the euro, we can see euro is still a little bit soft, although we have seen 3 days of a rebound, but this rebound has been very tentative and it's likely to come back down again into the 104.40 to 105.85 levels. So basically a challenge on 106 is almost a given, and we want to see how much lower it can go. But I think anyway, within this bracket of prices, anything below 106 is going to make a counter trend rally very very possible. So do look out for a counter trend rally to emerge from below 106. In sterling, I think the sterling have a little bit more room to go down to, and this morning we are at 123.80 levels with a overnight low at 123.70. So we are not much lower higher than the overnight low, and this momentum suggests that prices may likely go lower to 122.85 levels. So do look out for that. And we also have the Bank of England having interest rate decision on Thursday, so look out for that as well. The Bank of England is likely widely expected to hike rates by another quarter point, and this could be the last of the rate hike that we can see from the Bank of England. So if there's no more rate hike, we will probably see the same thing like what the ECB did. ECB actually cut high interest rate last week, but despite that, we can see the euro actually tank. So this could be something quite similar happening in the sterling. In Aussie has rebounded somewhat, but I think the rebound has been very tentative. Market has no real motivation to go much higher. Anyway, if the market do bounce higher, anything between 0.65 to 0.6535 will find some kind of resistance. Bottom side, I think there is still scope for the market to go down to 61 cent level or even 62 cents. So do watch out for further losses in the Aussie going forward. In dollar yen, market remains very well bid, and so these are the levels in which to watch. I think the 148.40 to 148.85 is a one level to watch. Follow if the market do break through or 149, it's probably going to go to 149.5 to 152. So 152 is where the last intervention happened in October last year. So do watch out for a similar move by the Bank of Japan. So anything much higher above 149, do watch out. Okay. And dollar Canadian is a little bit weak right now as we are speaking. The market right now seems to be pulling back from a high of 136.94 all the way down, targeting 134 levels. So do look out for a dip into 134 levels and then see whether it can stabilize. Okay. And over in energy markets, crude oil managed a new high last night at $91.36. Now this is a 10-month high. As the market goes into this bracket of prices between $91 and $93.74, this is the bracket I think the market will be vulnerable to profit taking. I do expect some kind of profit taking to actually happen anytime soon, and do watch out for a pullback into the $85 to $86 range. Over in precious metals, let's see what's happening in precious metals. Metals remains elevated, and we can see that the bounce off the $1,884.90 seems to have found a bottom at $1,900, and this looks like a three-way potential rally back to at least $1,969. So this bracket here is likely to be area of opportunity. Anyway, much higher, I think we will find some kind of serious resistance at 1,985 to 1,993 levels. So if the market goes up into this bracket, I think the market has a tendency to drop back again. So prime time for the precious metal, maybe we'll see another challenge to the bottom again. Okay. And in the silver, we can see silver rebound robustly from the low here at $22.30 on last Thursday, and prices has been rebounding since. This morning, we have seen prices at $23.23, and it's likely to go much higher. I think there's a very good scope that the market has already bottomed at $22.30, and it's probably gunning for $24.77 to as high as $25.27. Over in Bitcoin has stabilized somewhat. You can see that the price went up to as high as 27,441 just hours ago, and the price looks like it may come back down again. And if it does come back down, look out for support between 24,000 to 25,300. So I think this entire base here is likely to be able to hold out. I still believe that Bitcoin is still a buy overall, but the question here is that is it the time to buy if and when the market come back down here again? It's definitely something to consider over. So if you are a hardcore fanatic who likes digital assets, prices between 24 to 25,000 looks like a good buy. So in the meantime, this is all I have for you for today, and you take care, and I'll come back to you tomorrow with another update. Bye bye.